Hello everyone, and welcome to the third episode of the Daily Gwei Data Pump. In these episodes, I go through the various on-chain metrics of both the Ethereum network and DeFi as a whole, and give an analysis on them. For today's episode, I'll be going through the month of February and everything that happened then. There's been a lot of growth, so let's get right into it. So let's start off with the price action for February. So I've got the 4-hour chart open here, and right on the left-hand side of the screen here, you can see that we started February at about, I think it was like $1,300, and February was a very big month for ETH's price, right? We went all the way up to $2,040 on February 20th. And then, of course, we had that massive kind of dump towards the end of the month and kind of like basically ended the month essentially where we started. I think we went to 1291, so just under where we started the month at. So very interesting, right? We had such a huge price move and then just erased all those gains within a few days. And it kind of just looks like a massive, I guess, not really a head and shoulders pattern, but just like a really kind of massive just mountain, right? That we've kind of come down on. Now, it's interesting because we've started moving back up in March, of course. I think March generally is going to be a pretty good month for Ethereum and everything like that. But yeah, I'm not sure what happened with February, right? I mean, we were pretty healthy up until then. I mean, if we scroll out even more, we can kind of see that ETH was just like kind of bunny hopping up, right? All the way back in kind of like January here, up, and then we had like a bit of a crash here, but it wasn't like, I guess like, it wasn't like as bad as kind of what happened here, right? Where we erased all of February's gains. This crash here came like only a few days after, and then we kind of like recovered in January. So yeah, you can see the bunny hop, and then the bunny hop, and then the bunny hop, and then we just kept going up and up. And then, obviously we can't go up forever, but just a bit of a weird kind of thing that happened here where we guys kind of erased all of February's gains here, right? And then came down again and just erased further gains as well. And we've started going back up, which is really positive. But yeah, don't want to talk too much about the price, but I think it's good to contextualize it because the price action is very closely tied to the different on-chain kind of action, especially like gas fees and stuff like that. Like if the market's more volatile, there's going to be more activity on the network, there's going to be more gas fees, there's going to be more DeFi activity. So we're going to see that kind of play out in all these metrics, that February was a really, really big month across various metrics. So, let's jump into the metrics. So I kind of show this chart on every data pump episode, and it's basically the number of addresses holding with a balance of more than 10,000 ETH, all right? And it's been growing. Since, as I mentioned on kind of the last episode, since October, it's been growing pretty quickly. And, I think it grew from about 1,000 and kind of like 27 addresses holding more than 10,000 ETH to 1127. So about 100 new kind of whale addresses here. Now, you can see here that, I mean, this is in March, but like it's come down a little bit. But for all of February, it kind of like just went straight up, right? I mean, you can see here we started at about, I guess you could say 1,100, and then we went right up to 1,128. So that's another 28 addresses holding 10,000 ETH each. So that's almost 300,000 kind of ETH moved into these new addresses here. But as you can see here, we've come down a little bit. And that's only natural with the price going down. I think we've lost about maybe 6 or 7 or 8 kind of like addresses here, so that are holding 10,000 ETH or more. That doesn't mean that necessarily that they sold their ETH or it went to exchanges or anything. And I'll actually show exchange balances in a bit because that's pretty important to look at as well. But yeah, it does show that the kind of like, I guess, parabolic growth kind of like broke a little bit here. We did have some downtrends a little bit here, but nothing as kind of like steep as we've seen here since, I guess, like even here, like back in December, it's a bit steeper than that, or it seems to be a bit steeper than that. But I don't think there's anything to worry about here. I think, the market's still quite strong going into March, and I think, whales are still basically accumulating at this point. I think so. I'm curious to see what this is going to be like kind of like at the end of this month, but we'll have to kind of wait and see there. So next metric is the number of active addresses on the Ethereum network. So this is basically the last year's worth of active addresses. And, it's kind of followed the price, right? It's like bunny hopped up with the price. Obviously, whenever the price has like a downside movement, there's going to be less activity on the network. And that's kind of what we saw back here, right? I mean, August, September last year wasn't great for the price. And then we kind of had the activity coming down here. But what's really curious is that seems like the number of active addresses was basically a leading indicator here because the price didn't start dropping until the number of active addresses had already dropped by a fair bit. So the blue line actually shows the number of active addresses. So you can, and the gray line shows the price. So you can actually see as I'm scrolling down, the blue line fell like pretty rapidly, right? And then the price kind of like actually went sideways and then up. but then it came back down. So you could say that the active addresses here kind of acted as a bit of a leading indicator, but that's not always the case, because as you can see here, there's kind of like these just, I guess you can call them bunny heels or steps, where, you know, the price is just like going up pretty slowly, and the active addresses are just like up and down, up and down, up and down. And then obviously, you know, you have a big spike when the price goes up. But yeah, this metric in general, I just look at for overall health of the network. I don't really use it as a trading signal or anything like that, because it's just, it's kind of noisy, right? And there are a lot of things that can happen on the Ethereum network that have nothing to do with ETH's price movement. So there could be some new, you know, hot new DeFi thing that everyone wants to get in on. You know, for example, there could be the Uni airdrop, where lots of people were kind of like claiming that, but they weren't exactly buying ETH or anything. So it didn't really affect, you know, the ETH price, for example. So that's why this metric, I think, isn't probably as relevant for Ethereum as it is for something like Bitcoin. But it still, you know, shows overall health. And if we scroll out to like the all-time kind of chart here, the trend is really just up. It doesn't matter about like these zigzags here. The trend is really continuing up here. And obviously, as you would expect with the price going down over the past couple of weeks, you know, the active addresses have come down a bit, but it doesn't seem like that's like directly correlated. But yeah, we'll have to see from there. But I think that, you know, it wasn't just ETH that went down, right? There's a lot of DeFi activity too, a lot of DeFi tokens. Volumes are down a bit. Market is picking back up now, but yeah, towards the end of February there, the market got pretty spooked by such a large drop. I think ETH dropped like 35% or something like that from kind of local top to bottom there. Which was a pretty steep drop. Normal in a bull market, but pretty steep for people who had just seen it going up for the last few months. So definitely a metric that I like to keep track of, but not something that I use as an active trading signal. So Ethereum's Grayscale Inflow. So for those who don't know, Grayscale runs a bunch of different funds where basically people can buy into these funds and get tax kind of advantages for doing so. They had a very, very big February, as you can see here. They had a ton of inflows, right, coming into the fund. But then the inflows kind of like tapered off, right, just about when the price came down, because you can see the kind of like price in the gray. So, you know, it tapered off like maybe, I guess, like 4 days before the price really went down, right? Was that a leading indicator? Maybe. I don't know. I don't think there's enough data here to kind of like tell, but that is definitely interesting to see. And as you can see, the inflows have actually gone down completely, right? There's only about, I think, 500 ETH going in a day now, when at peak it was about 15,000 or more ETH going in. So quite a drastic change there. And because of this, there's actually a thing called the premium on the ETH fund and the GBTC Grayscale fund, where they were trading at like a massive premium because there was so much demand through the product, and there's no kind of like redemption function, and there's like lock-in on these funds. So there was no way to close that kind of I guess like premium until a certain amount of time. I think for 6 months you have to wait for ETH, 12 months for Bitcoin. But because of that, the premium got away. But it's actually trading at a discount now, so there's no premium. I think GBTC is trading at like a 10% discount to BTC's spot price. So if you were to go buy GBTC, you'd buy it at a 10% discount to what BTC is actually trading at on market. So I think that's the biggest kind of discount in history there. And it makes sense because, you know, the BTC inflows looks the same as the ETH inflows here. And, you know, the market kind of like, I guess people get spooked, right? Like, especially a lot of people buying this product are basically not really into crypto, I would assume, right? They're definitely more just like trying to get exposure to ETH because they heard about it or something like that. So they definitely will get spooked by such a large kind of drawdown. I mean, 2,000 to 1,300 in a matter of like a few days, I think it was like a week, is a steep drop. And, you know, I think that scared a little bit of people off. But I think as we keep having this positive price movement that we've been seeing, we're probably going to see these inflows tick up again. So pretty interesting thing to watch. But, you know, there's also, and I'll go through this in a sec, there's also a kind of an ETF that got spun up as well, where I think there's one for ETH, but more so for Bitcoin, where the Bitcoin ETFs is actually a better product to get tax advantage exposure to Bitcoin. And I think I've got it up here. Yeah, you can see here, this is an ETF, not in the US, it's in Canada, where, you know, it only launched basically on the 25th of Feb, right? And you can see here that the inflows for Grayscale here kind of like really kind of, I guess, like just before that, not, you know, maybe a few days before that ETF launch, but since then, you know, it's kind of been on a downtrend here. So, you know, that's interesting to see. And if we go to Bitcoin, actually, we can see their flows, right? I mean, you know, this tapered off like earlier than ETH did, for example, but still, could the ETF be playing a part here? Because this ETF is extremely popular. You can see here how many kind of Bitcoins it's sucking up. I mean, that's like 10,000 on March 5th here, or 11,000 BTC in just one day on this ETF, because it's a better vehicle than the Grayscale funds. And I think that might be also affecting the inflows into Grayscale here. So again, these ETFs are Canadian, they're not US ETFs, but I feel like an ETF in the US is coming like very soon. It's just so weird that doesn't exist yet, especially for something like Bitcoin. I feel like Bitcoin will get, a bunch of them first, then ETH's going to be shortly after. But at this point, the US is lagging, and they need to do it, right? They've gotten to a point now where they're actually a kingmaker, the SEC, of approving, because there's so many different companies that want to have their ETF approved, and there's so much demand for it that whatever company gets theirs approved is going to have like massive inflows. So I think they're going to approve a bunch of them at once, and then we're going to see ETH ones approved as well, and that's just going to be like a huge thing, because there is really like potentially hundreds of billions of fresh capital waiting to come into these products that may not go into Grayscale's kind of funds anymore. So we're going to have to see how that plays out. Maybe it's not bearish that Grayscale isn't getting inflows because it's going into these ETFs instead. We'll see. We'll see how that plays out over the next, I guess, like month or so. So this is another metric that I've been keeping an eye on. It's called the net unrealized profit / loss, or shortened as NUPL. What this basically measures is how much of, I guess, like the network is in profit. So how many ETH holders are in profit and by how much. Now, you can see here, we're basically in the green zone right now. If you're in the blue zone, it's basically saying that like so many of the ETH holders are in so much profit right now. They've made so much money that it's getting like really overheated. And they kind of like call this the euphoria / greed stage. So yeah, we're not there just yet. We're just in the green. We're trending up towards the blue, but because we had that kind of like downturn, we've kind of gone down here. And if I zoom into just like the last year, you can kind of see it, better here. Now, if this goes into the blue, I would expect us to, we can stay there for quite a while. I mean, as you can see in 2017, we stayed in the blue here from April of 2017 until basically July of 2017, where we stayed in the blue. And, during that time, ETH had like a kind of like pretty wild swing here. I mean, it went from $50 to 420, I think it peaked at, and then it came back down into 240 before going back into the green. Now, I'm not saying that you should sell every time it goes into the blue, but every time it has gone into the blue, it is a pretty good signal that the market is extremely overheated. A lot of people have made a lot of money, and it's a high chance that these people are going to be cashing out, right? That's just the way it goes. And you can see here it works both ways. I mean, the red is basically, I guess, like how many people have basically underwater, essentially, and, how many people would be selling at a loss if they sold now. Usually this is, where you want to buy, right? Because you're basically buying the blood, which is always a good kind of time, as you can see. In the long run, it pays off. Like, maybe you bought kind of like down here, when this was basically the end of not the end of the bear market, but this is the first time ETH went to like $80. And then you can see that was really kind of like extreme. And if you bought there, ETH didn't really revisit kind of like $80 until Black Thursday, and even then it was like a blip, and I think it only got to like $90. So buying down here was like the buy of a lifetime for ETH, and that's when this metric was basically showing so much of the network was underwater here that they're probably just not even going to cut their losses anymore. They're just going to not sell, which is a pretty good kind of like metric there. But generally, over the last kind of like, I guess February was basically all green. We almost headed into blue, but, we had to cool down before we did that. And I'm curious to see if that actually happened at any point in the past. It didn't really. Like, when we were in the green in the past, in 2017, we actually went into the blue. And I think that's because ETH had such a rapid price rise, right? Like, if you see the beginning of 2017, ETH was about $10. And then, by the time I got to the blue, it was $50. So that was a 5x. This measures based on, not on price, but based on, like, gains. So that's a 5x for anyone who's held since January in March, right? That's over just 2 or 3 months, you had 5 times your money. Whereas this green started in November of 2020. ETH was about, say 550, and then peaked at like, kind of like, I guess 2000, which is kind of less than a 4 times. So not as drastic of a move, like, or pretty much, still a pretty good move, but not enough to push us into the blue zone. Still though, like, in green, like as you can see here, like sometimes green can like kind of go sideways for a bit and then kind of like go into the blue and then dump down. Yeah, it's just funny that we kind of didn't go into the blue here, but I guess we didn't move up fast enough for this kind of metric to show that. And also, it doesn't mean, as I said, because it measures kind of how many people are in profit and by how much. I think a lot of people got blindsided by ETH's move towards kind of the end of December here. I think what ended up happening is a lot of people bought in around here, right? The end of December, because BTC was going up and ETH BTC was bleeding, and many people were underexposed to kind of like ETH. So I think what happened is that a lot of people jumped in here at around the $700 mark, and that's why we didn't go into blue, because 700 to 2,000 is only about a 3x, right? So if we went to something like 3,000, then I fully expect, even 2,500, I fully expect that this would have started going into the blue, and we would have been like really overheated. But it's actually really healthy that we didn't. It's healthy that we stayed in the green, because we're in a relatively safe zone. Ideally you want to stay in the kind of yellow if you want like a healthy price, right? Where we just like slowly grind up, but markets don't work like that. But yeah, this is one of my favorite metrics to watch. Not so much as you should sell right now when it goes into the blue, because as I said, it can stay in the blue for a while, because it stayed in the blue from like, April to June here sort of thing. Or at least like even to like July. Whereas, sometimes it doesn't stay that long, right? Sometimes it's only about a month or so. It's just hard. So I guess like any time in the green or even in the kind of like in the blue is probably like an ideal time to take some profits based on the risk metric. But again, it can go another 2 or 3 times and still be kind of like in the blue and still not be the market top. So you always have to be comfortable with that. I actually prefer this metric for just buying kind of like, I guess, market bottoms. Like I loved buying in the red here. Basically, this was like the $100 to $200 mark is where the red was. That was the best time to buy ETH, like hands down. And you had so long to do that, right? You had like multiple times during 2018, 2019 to buy there. And now you're sitting on like at this price, what is it? $1,700 right now. You're sitting on like over an 8x from 200 here. And then if you bought it like the $100 mark, you're sitting on a 17x, which is crazy returns for kind of like a year or even less than a year here. So yeah, I don't really like to use this for bull markets because bull markets are just way too frothy, and it can go like so much higher than what you think it can. And kind of like bear markets is, a lot of the bear market just seems to be ranging, right? Bull markets don't really kind of like do this range. They kind of like do way more violent moves where they go up really quickly, then dump 30% and then keep going up, right? You just don't know. So generally this metric I like to just look at in more of a kind of bear market context, but still a very good metric. I'll have this all linked in the YouTube description, by the way, so you can go check them out for yourself. You can sort the moving averages, right, by like 0 days here. And then if you sort by 0 days, you can see that we like literally almost got into the blue. And then if you sort by like kind of like the 90-day moving average, right, it's just like it gives you a smoother picture, but it's more of a long-term kind of outlook, not a short-term. But you can go play with all this. It'll be linked in the YouTube description. So as I said before, we'd be looking at the kind of exchange balances for ETH. Now, this is basically, I guess, like you can see since kind of like August last year, it's kind of been going down like really, really rapidly, right? If we were to just kind of like zoom in more and maybe take January to March here, we can see that January, I think it started off at 22 million, 22.3 million ETH, and then down to about like 20.9. So, about 1.3 million ETH kind of came out of exchanges here, basically came out of exchange reserves, and this is all exchange wallets, I think including cold wallets, which is pretty healthy, right? And then if we can kind of like, I guess like zoom back out, we can kind of like see, how do I zoom out here? I think you have to kind of like reset the chart somewhere here. Oh man, this isn't very intuitive right now. Oh, well, I'll just refresh the page. Maybe that's easier. But, yeah, I mean, this is just really healthy to see all the kind of like, I guess like reserves coming out of exchanges. I mean, this is, as I said, measuring kind of cold wallets as well. I think Glassnode kind of has like a metric for this too, where you go exchange balance, kind of like percentage here, which I think just counts like maybe hot wallets too. And you can see this has been coming down as well, right? During kind of like the later months of last year and like recently, and it's still going down. I think, 13.8% of all, almost 14% of all ETH is probably, but it's probably about the same actually, 20 something million ETH. But I think I like the percentage better because it kind of gives you a better picture that it's only 14% of all ETH on exchanges. Whereas, there's ETH in a lot of other places, right? There's ETH in DeFi, there's ETH on kind of like in ETH2, there's ETH in people's wallets just holding it there. I mean, there's ETH everywhere right now. And, especially in DeFi, there's ETH in like liquidity pools as used as collateral. So yeah, I think it's just really cool to see, ETH coming off centralized exchanges and going into other places, because it's very healthy for, I guess, the decentralization of the network, right? But yeah, really cool metric to kind of keep an eye on here as well. So the block has a bunch of different metrics, and I actually just want to have a look at all of them today. Well, not all of them, but like go over like an overview of what they have here. And this is cool because a lot of this data is actually normally behind a paywall, but the block is kind of offering it to people for free here. So you can see kind of like the metrics like the transactions on the Ethereum network, but like that sort of stuff's usually given for free. There's a couple of deeper metrics here, like adjusted on-chain volume, which absolutely exploded, and this is just ETH. This isn't including like all the tokens. So this is basically just ETH moving on chain. And you can see that February was a record month where $271 billion worth of ETH moved on chain. And this, basically dwarfs what we saw at the top of the last market in January of 2018 when it was $152 billion. And what's even more impressive about this is that, back in January of 2018, we didn't have stable coins on the market, which take up a lot of the on-chain kind of volume here. So to see that ETH is just like still being used very strongly here is incredible. It's absolutely incredible. So there's that metric. Obviously, miner revenue was huge in February, as you can see here on this chart. Like, they made a crap ton from fees. I think they made more in fees than they did from the block reward, from what it looks like. Yeah, they did. They made $644 million from the block reward and $722 million from the fees. Absolutely insane. And you can see why miners don't want EIP 1559 to come in, which is funny because, and I'll talk about this a little bit later, actually. I'll leave the discussion until I talk about like the gas prices and how that plays into this. But still funny to see that. The Ethereum kind of hash rate is at an all-time high here, almost 400 terahashes. That's like, I think pretty much almost double the last bull market, which is some incredible growth there. You scroll down here, you can go to the hash rate by pool. Obviously there's a bunch of different pools that dominate here. Spark pool, Ethermine, and I think... what's this pool here? The blue one. I think it's just others. Yeah, they kind of like dominate the network here. We scroll down a bit more. You can see the transaction fees. Obviously, were very big in February. Have come down lately because the market kind of actions down. And they also have a metric for like Ethereum addresses with balance over dollar amount. So this metric, I think I went through it kind of like on the last episode. But basically, you can see that there's over 1,000. There's over 1.6 million addresses with over $1,000 in them, which is really cool. And you can see how much this has spiked. I think this is a function of having to have ETH in your wallet for gas fees though, because if the gas fees are really high, maybe after like 20 or 30 transactions, you've spent $1,000, right? So I think that's a big reason why, but also the fact that the ETH price went up too, right, is correlated to that. And you can see the percentage of the ETH supply that's active here. So, this basically shows like that. I mean, the 5-year thing's pretty cool. Like you can see that, for 5 years, I think 3.3% of the supply hasn't been active for more than 5 years, which is pretty crazy, right? 5 years. I mean, the Ethereum network's only been around for 6 years, so I think that's like a lot of original ICO addresses that didn't kind of claim their Genesis kind of ETH and stuff like that. But yeah, you should go check out this. I mean, this isn't just like their blocks dashboard isn't just Ethereum. They've got like obviously Bitcoin. They have DeFi stuff here. They have NFTs. I mean, I think this NFT section's quite new. And actually, I was going to talk about NFT stuff, so I'm going to move this over here when I talk about the NFT volumes, because there's one more thing I wanted to talk about with regards to just Ethereum on-chain, and that's basically this metric from Into the Block that measures Twitter sentiment, which I thought was pretty cool, because it's not obviously the Ethereum network on-chain, it's just sentiment in general, and they kind of classify tweets as positive, neutral, or negative, and they follow the price here. So as you can see here, during February, we were pretty heavy on the positive tweets. There was about 33% positive, 63% neutral, and only 4% negative. But then as we moved throughout, I guess, like the month and towards the end of the month, right, the positive tweets came down a little bit and the negative tweets kind of like went up. So you can see here, the positive tweets at, I guess, like, oh God, even if you go like down, maybe I think here, I think this was like, I guess like the bottom basically, or almost the bottom. Actually, if we follow the price, we can go to the bottom. The negative tweets basically spiked up to like 6%, I think around here, or over 6%. Positive tweets kind of dropped by about the same. And then, yeah, we've kind of like had a resurgence here as the price has been going up. So Yeah, it's funny because a lot of the tweets are classified as neutral, so you don't exactly know, kind of like, and I don't know if you can use this as a trading signal, but it's just fun to see that like a lot of the tweets are positive here, and I'm curious to see how far back their data goes. Yeah, it actually goes back to like kind of 2019 here, and 2019 was a very neutral year for ETH, and you can see neutral was like the majority of the sentiment because 2019, nothing kind of happened for ETH. It started the year at like 130, ended the year at 130. So, you know, people weren't neither kind of like positive or negative on it. They were just like, yeah, okay, ETH's a stable coin, right? But then towards the end of DeFi summer, we had like the, I guess like coming into DeFi summer, we had kind of compound liquidity mine launch, and then all of that kind of stuff happened, and the positive tweets kind of, exploded, right? And then we've kind of been positive ever since, I think. There are a lot of neutral tweets, of course, but, overall positive here. So as I said, I wanted to talk about the NFT growth during the last month. So I think February really was the month of NFTs, right? You can see that over just, I guess this site shows just the volume over the last 7 days, which includes a bit of March, of course, but basically over the last 7 days, CryptoPunks did $14 million worth of volume. Sorare, which is I think a collectible kind of like a trading card game for like soccer, did 6 million. Super Rare did 5.6. Hashmask almost 5 million. I mean, these are just the last 7 days. You can see all-time volume. I mean, CryptoPunks has done $100 million worth of all-time volume. 25 million from Sorare, 25 million from Super Rare. I mean, if I sort this actually here, you can see actually Hashmarks has done 52 million, Decentraland 42 million. I mean, there's some good numbers here, right? Just for NFTs. And I think the block has more data here, with the trade volume. I mean, look at this. Like, basically, I mean, NFTs weren't really a thing until recently, right? Look at this trade volume in just January and February here. I mean, if we kind of like just go to the last 3 months, you can see that February was a breakout month where basically CryptoPunks and I guess like NBA Top Shot. I mean, this might be controversial, but I don't consider NBA Top Shot to really be an NFT. They're kind of like a centralized thing where you have to KYC and everything. To me, NBA Top Shot's more like a digital collectible rather than an NFT, so I wouldn't really count it here. So if we remove them from it and just look at like, the rest of them, you can kind of see that the growth is still kind of amazing. And a lot of it was actually CryptoPunks, which is quite funny. And you can see the weekly kind of users of different NFT platforms, again, excluding NBA Top Shot from here. You have like kind of Axie Infinity leading the charge here on a lot of it. But if we do include NBA Top Shot, I mean, as I said, like, it's very centralized, right? There's been withdrawal issues. You can't really do anything with it. It's not built on Ethereum. It's KYC'd, but this works, right? Because the centralization is easier than decentralization, and obviously the NBA is extremely popular, so they've got a ton of users into kind of like this platform here. But again, I just don't classify them as like a true NFT. And maybe that sounds like maximalist, me thinking that NFTs can only live on Ethereum. That's not it. It's more about the fact that like if it's just like behind a centralized kind of, I guess, paywall, if it's like a not paywall, but like a centralized ecosystem, it's like a walled garden, you can't withdraw your assets and do whatever you want with them. It's not really in the spirit of NFTs, right? So yeah, I wouldn't really count that here, but I mean, definitely they have the growth. Like, I'm not going to deny that, right? But I think that they shouldn't be classified as NFTs. But anyway, I mean, outside of that, everything else has been growing. What's funny is CryptoKitties is still here in terms of, like, transaction volume. And then the average price of a sale. I mean, CryptoPunks is definitely leading the charge. I mean, a lot of you would have seen the $1 million CryptoPunks, right? And stuff like that. And I think the floor on CryptoPunks is like 30,000 right now. I think it was like 50,000 at one point, where kind of like the cheapest CryptoPunk is 30,000, so that's pretty crazy as well. But yeah, a big month for NFTs here. Big month for NFT platforms as well. OpenSea did $5 million worth of sales in February. I think this was back in February 2nd, so even at the start of the month. And I think, wait, when was this? When did they post this? February 4th. I don't know if they've got an update here. Maybe they do. If I click through here. No, it doesn't look like it. But yeah, that was back at the beginning of February. I think they've done a lot more than that at this point, because OpenSea is a very, very great, very, very good platform, full of like a lot of the trading activity going on. So yeah, big month for NFTs. I think I'm gonna try and find some more like metrics for NFTs for next data pump, the next data pump episode, because only recently have people started putting together stuff. I mean, the dashboard from the block is very new, I think, and they're kind of like backfilling data here, but still really cool kind of new, I guess, area to keep an eye on. So DeFi, of course, had a very big February as well. I mean, looking at the TVL growth, we started the month at, I think it was what, 30 billion. You know, we went all the way up to 45 billion, came down because the price went down, and we're kind of at, you know, $40 billion now. In terms of ETH locked, that actually went up quite a bit. We had like 7.8 million ETH at the end of Jan, up to like, I guess like the end of Feb was about 8.7. So almost 1 million more ETH went into DeFi, which is really, really positive to see. Because if you go like the all-time chart, we're still not at all-time high here. I think the all-time high was about 9.7 or 9.8. And I explained on I guess the last refill episode that I think a lot of that ETH went into ETH2, right? And I'll talk about ETH2 in a bit, but basically I think, you know, a lot of that stopped now. So people are going back into DeFi with their ETH. TVL, of course, like a lot of platforms had a lot of growth. I mean, MakerDAO especially still had a lot of growth. You can see here that since the beginning of Feb, they had 4.6 billion locked, and now they have about 6.3 billion. So they've been a big beneficiary here. They peaked at like 7.16, you know, because a lot of their TVL is ETH. So, you know, as ETH goes down, they go down. But in terms of ETH going into it, you know, it's still going up very fast, right? The end of, I guess, like the beginning of Feb was 2.8 million ETH, and then the kind of like end of Feb was 3 million. So yeah, I mean, 2.8, 3 million, that's like 300,000 ETH just going to MakerDAO alone. So yeah, been a beneficiary of that for sure. The DAI supply is, of course, at all-time high. Almost 3 billion DAI is supplied right now. A lot of that is drawn from ETH. You can see $1.3 billion is coming from the ETH A vault. And then you have some coming from, I guess, like other things like BAT, USDC. WBTC accounts for a lot, accounts for $250 million worth of DAI. You know, they've got a bunch of tokens here now. I mean, you can just keep scrolling down and find them all on the left-hand side here. I think it's WBTC, ETH, Link as well, $34 million from Link. That's $27 million from DAI. Yeah, so I mean, Maker is just like growing. I mean, it's funny because the MKR price is not really doing much, but the Maker platform itself is just growing exponentially. The Maker burn, in terms of like the token, you can kind of see like the Maker burn site, where it basically shows you the kind of like the amount of MKR that's going to be burned, and the MKR that has been burned based on the stability fees that are owed. So there's $60 million worth of stability fees owed, which means that the annual Maker burn right now will be 42,000 MKR. So 4% or over 4% of the supply is going to be burned each year based on the stability fees that are owed to the system. So that's pretty crazy, right? I mean, that's huge. That's and the MKR price is doing not much. So I think that the market doesn't really understand MKR, doesn't understand like how it's going to be valuable in the future. This is an investment advice, but I actually think MKR is one of those things that you can just buy and hold for like a while, and it'll just go up slowly over time based on this buy pressure from the stability fees. But I think, you know, a lot of people in the ecosystem prefers the staking mechanism where you stake your tokens and you get like a dividend, whereas this is basically, instead of doing that, you know, the stability fees go and buy Maker off the market and burn it. But yeah, I mean, it doesn't really do much to pump the price, but it's fundamentally pretty strong. So definitely keep an eye on that. So Layer 2 had a really big month in February, especially Loopring due to the high gas fees. You can see here that, I guess even just during January, they had a big month of liquidity flowing in. The Loopring wallet kind of signups was pretty good as well. You know, they had, I guess, like almost 1,000 kind of signups here. You can see here, like all the metrics. I guess the total trading volume is going up to almost 1 billion. You can see the exchange balance for their Loopring V3.6 obviously spiked up a lot during February. And, you know, all their metrics are kind of like up and to the right here. One metric that I really liked about Loopring was something that Matt Finestone posted here, that because they're a layer 2 exchange, they pay Ethereum's layer 1 for security. So basically, this is the cost that's being paid to layer 1. And you can see that it's in red, and it's actually kind of like, I guess, being hidden by the green here, but that's all the kind of amount in USD that just Loopring's layer 2 is paying to Ethereum to secure itself. And this is a lot of money, right? I mean, look at that. Like, that's thousands of dollars, tens of thousands of dollars in February being paid to the L1, and that's all being paid by L2 fee income as well. So very, very kind of healthy growth there, and kind of like healthy security paid to Loopring because they're paying for it from, you know, the Ethereum main chain here. Speaking of decentralized exchanges, they had an absolutely massive February. If I scroll down here, you'll be able to see why. It was the record month for decentralized exchange volume at 75 billion. And I actually think that both January and February, if you add these up together, account for more volume than we saw in the total of 2020. Yeah, that's crazy, right? 2 months in 2021 account for more volume than the whole year of 2020, which is just absolutely insane growth here. You do not see this growth anywhere else in the world right now. Not in fintech, not in tech startups. This is just absolutely incredible in crypto for growth here on DEXs. I mean, and we're like firmly over the $1 billion of kind of like volume over 24 hours. Even in markets where it's quiet, it's still over $1 billion here. I mean, we did over $11 billion over the last 7 days, right? Absolutely crazy growth, and a lot of that's coming obviously from Uniswap, SushiSwap, Curve, 0x, you know, all of your favorites. And there's actually a new chart here that they added recently where it shows like how much volume is coming from aggregators and how much is coming from direct centralized exchanges. So aggregators are taking up about, I guess, like you could say maybe on average 20% of the pie, with direct taking up 80%. I actually would have thought aggregators are more, but it seems a lot of people are just going directly to things like Uniswap and SushiSwap instead of going to aggregators, which was surprising. But yeah, very big month for DEXs here. So this dashboard shows the gas prices on the network over time. So as you can see, you know, gas prices, I mean, if you scroll down here, you'll be able to see, you know, January, February, kind of like they spiked up and were like pretty high during February, but have come down lately. And, you know, I'm sure you've all noticed how much the gas prices have come down, like over 50%, I think, from their peaks here. And this also shows you like the gas limit of the network, which is basically the block size, the median gas, you know, cumulative gas prices. I mean, we all know, you know, the gas prices are very high right now, but for me, it's just interesting to see kind of this chart here on the left, the median gas price by day over the last 90 days. We had like obviously a big spike during February, and then a really big spike when the price was coming down. And then, you know, we've kind of tapered off, and the market's kind of gone quiet, and the gas market's gone quiet as well. You can kind of see that play out here. This is gasnow.org, which is basically a site that shows you, I guess, the current gas price. And they also have historical gas prices and like when the best time to get your transactions in. You know, I think this is, I guess, March over the last week or so. You know, we're seeing 70s again. Like, I can't remember the last time I saw 70s. And I've been seeing 60s lately as well. And this is for Rapid. If you just go to fast, I think, yeah, Rapid is like the fastest and fast is the second kind of fastest. You can see there's 60s, right? I mean, that's pretty crazy after going through February where it was like consistently in the high 100s or 200s. We've come down a bit here, but this is really good because you can see, you know, what time in, I think this is in UTC time, that is best to kind of like put your transactions in. Obviously, if you're sleeping, it's not great. I think this is actually when the US is sleeping, or at least the US and Europe are sleeping, because that would make a lot of sense. And then you can see the worst times around here, which is like peak times to get your transaction in. So something to keep an eye on for sure is this sort of stuff. But yeah, interesting to see the gas prices have come down. And actually, I was talking about this before, and I mentioned how like the miners were kind of like fighting back against EIP 1559, which was approved last week for inclusion in a hard fork, because they're saying their revenue is going to drop. And the biggest estimates I think I've seen, or at least the best estimates I've seen on how many fees are going to be burned with EIP 1559 is between 20 and 35%. And so that would burn 20 and 35% of current miner revenue. But they just got like a massive pay cut, right? Because the gas fees went down by over 50%. So I don't hear them complaining about like the gas fees coming down, right? And this just goes to the core point that gas fees are very volatile. It's highly dependent on network activity, highly dependent on market activity and how hot the market is. So no one can really kind of tell what's going to happen. So fee kind of revenue is variable, and miners should just rely on the block reward, not the fees, because the fees are, you know, going to vary wildly from time to time, as we've seen. So that's just a very interesting thing to note as well. But yeah, definitely go check out this site. There's actually a Chrome extension you can get as well that'll basically show you rapid, fast, you know, standard and slow prices for your transactions, and it'll help you get your transactions into the next block a lot faster than just like trying to guess it, I guess, on your own. So this is, as I was saying, fees. This is the total transaction fees, and you can see they've come off a kind of cliff here, right? I mean, if I zoom into like a year, I guess, or maybe like the last 6 months would be better. Look at that, right? The fees spiked to, I think, $32 million, on, I guess, February 23rd, 24th, which was like when the ETH price was coming down a lot, right? And then it's just kind of like fallen off a cliff due to the market volatility going down. It's more than halved, right? It's down more than 50% here. And that's pretty crazy to see, right? This is minor revenue, as I was just saying, getting halved just based on market activity. So yeah, very interesting there. But we're still at kind of like all-time kind of highs here. I mean, this is, I think, a linear chart, so it looks a bit more pronounced. I wonder if I can actually change it to like a log chart. Actually, I can, yeah, and I get rid of the price here, I think, as well. Yeah, it doesn't look as pronounced if you look at it in log, because it's still up a lot and we're still near all-time highs. And I do expect the fees to go back up again when the market heats up again. So yeah, interesting kind of thing to keep an eye on here. So ETH2, funny thing happened with ETH2 over the last week or so is that the validator queue emptied, which means that there's no more pending validators, which means that the ETH going into the deposit contract flatlined. So it seems that we've reached equilibrium where all the people who wanted to be ETH stakers in the current setup are ETH stakers. And now they're either waiting, the people who are on the sidelines are either waiting for centralized kind of solutions or decentralized solutions like Coinbase's staking and Rocket Pool and things like that to stake their ETH. And you can see here, it's up here on this chart on the left here, you can see it flatlined, right? There's just not much happening here. And also the AP, that means the APY at the current staked ETH is 8.5% or around 8.5%. So all ETH stakers are currently still earning 8.5%. As more ETH comes in, obviously that'll go down, but it seems like we've flatlined until maybe Coinbase sets up their staking, and then we're probably going to see like a massive inflow, I guess, of kind of ETH into the staking contract here. But yeah, fun to kind of keep an eye on this. I think, as we kind of like get these centralized kind of like solutions coming on board, and not just that, I think decentralized solutions like Rocket Pool, more of these staking services coming on board, there's going to be just more ETH going in, but I don't expect like anything major, unless it's like a exchange like Coinbase. I could see Coinbase putting in a million ETH at once, right? We'll have to see how that plays out. That'll obviously collapse the APY a bit, because if we go and add 1 million to 3.4 million ETH and go to 4.4 million, that'll be just 7.5% instead of 8.5%, which isn't too bad. But, you can imagine if we get to the point where like 10 million ETH is staked, it goes down to 4.9%. And, that, I mean, it depends on kind of like how much risk you want to take and how much gains you want, because you can get much more than that in DeFi right now with your ETH. But, DeFi is riskier. You usually have to take leverage to get that. So yeah, but interesting to see where it kind of like, I guess, like tapered out at. But I feel like we haven't seen the last of this, and I feel like we're going to see more ETH kind of come in over the coming days and weeks. So yeah, definitely keep an eye on that one. All right, that's it for today's Daily Gwei Data Pump video. Thank you everyone for listening and watching. If you haven't done so, be sure to subscribe to the channel. I don't just do the Data Pump videos. I also do the Daily Gwei Refuel videos, which is like a recap every weekday of the latest news in the Ethereum ecosystem. So subscribe to the channel so you don't miss that. Give that video a thumbs up. Subscribe to the newsletter if you haven't yet. And join the Discord channel. And I'll catch you all next month. Thanks, everyone.